Hopefully you never find yourself in this situation, but often we do. We make an insurance claim and then you've got the issue of negotiating with the insurance company over the value of the car. This video really is going to empower you to negotiate with the insurer and to get a fair value for your car. Now, firstly, I have to say, if you ask anyone what the value of their car is, they will always put it far and above what the current market value is. We're optimists. We like to think our car is much more valuable than it is. And in fact, if we bought a new car and drove it off the forecourt, the value has already plummeted significantly. What are some of the tricks in our arsenal, though, that will help us to negotiate a better price on our insurance settlement? Well, we can't just demand more money. We have to back that up with evidence. And things are probably not as bad as they were when I was in the insurance world. A lot of insurers have now been fined for unfair claim settlements and have had to pay compensation where they have underpaid a claim. And that was a situation where they assumed there were faults on the car. They looked at the market value and then they deducted a bit because of potential faults. And often cars don't have faults. They don't have blemishes. So that would be unreasonable for the insurance company to make a reduction for those items. There's various online services that give you a valuation of your car. There's the buy any car supermarkets that are out there. Auto Trader, Parker's, CAP, they all have a facility where you can enter your registration number and it will give you a market value. Now, you have to adjust that market value. If your car is in poor condition, if it needs substantial amounts of work, if the bodywork is not perfect, and when I say perfect, I mean commensurate with the age of the vehicle. So a car that's 10, 15 years old, you would expect a few blemishes and minor scratches on the bodywork. But a car that's 2 or 3 years old, you would expect the bodywork to be in pristine condition. We need to do this as soon as we've had the accident, because claims can often take a month or two to sort out. And by that point, the valuations offered and the valuations you can get in your defence are generally 2 months old. If you've gone over a critical date period, like the new registration coming out, these plummets can value by fairly considerable percentages. Let's also look now at some of the things insurance companies will do to reduce the amount they pay out. It's legitimate, but if we're aware of it, we can preempt this in our negotiation. We can maybe even lower our expectations a little. So we're going to talk about betterment and underinsurance in this section. If we've bought the car from a dealer and it had a warranty, then the valuation that's given to us to replace the car should be to go back to a dealer and to get a car with a warranty. If they are trying to insist on a used car valuation, that is not a fair offer. That is not a fair replacement. Insurance companies don't like wasting time negotiating. They will try and give a fair offer to start with, but often that is below expectations. And as we said at the beginning, a lot of drivers' expectations are just unrealistically high. But with the tools that we've provided in this video, you should be armed to go back to your insurance company and you'll have a good basis for negotiating an increased settlement offer from them. And in some situations, rather than take a repair or a replacement car, you can often ask for a cash settlement, and that will usually result in a bit of a reduction from the value, because insurance companies can generally claim back VAT and they've got various deals and discounts with suppliers of replacement cars, or they've got deals with the various repairers they can use, but they will give you a cash settlement. And often you can get the car repaired locally more cheaply than the cash settlement has been offered. So that might be a good way of dealing with a claim, particularly if the car is a borderline total loss and you don't want a total loss settlement. There's something about the car, or you've invested time and money in the car and you don't want to see it written off. And that might just be a way to ask for cash in lieu of settlement or cash in lieu of repair. And it's always worth asking the question if that might be an issue, because the insurance company will generally make you a cash offer and the overall valuation of the car will still be on the table for you to take out if that cash offer didn't work out and you couldn't make the figures line up. When insurance companies make an offer for your car, it's rarely a fair offer. They're usually getting away with the bare minimum offer. Now, what we can do is negotiate over that offer. Now, they might even say that if they renegotiate with us, we could end up with a lower offer, but don't let that put us off. If we have a quality case of argument against the valuation that they've provided and we can back that up, we stand a really good chance of getting an increased offer. Now, the first thing to bear in mind is that there are regional variations. We live down here in the south, so London and the southeast, car prices do tend to be much higher than they are in other more deprived areas of the country, should we say. When the insurance company make an offer, it's based on the average book prices for the whole country. If we can argue that this model of car that we've got in that condition costs more money locally, we could use that as a basis, and we would go through for sale ads and snip out all of the similar cars that we've got and use that as justification of a higher offer, because we want to replace the car that we lost. Now, another clause that is often used in insurance, and particularly house insurance, but sometimes on car insurance or classic car insurance where there is an agreed value, is underinsurance. Underinsurance is where we underdeclare the value of the item we're insuring. If, for example, it was worth 50,000 and we said it was only worth 25,000, we've only insured it for 50% of its real value. Now, when insurance companies come to pay out a claim, they can legitimately say to us, well, you've only insured 50% of the total value of this item and it's been lost, so we're going to pay you 50% of the claim settlement. But like I say, that is unusual to happen on a car insurance, but often insurance companies will use this when they're paying out a claim for other types of insurance or those agreed value policies. Betterment is another excuse that insurers use to reduce the value. Now, for example, we've got a set of tyres on a car and they've used up most of their tread life. For argument's sake then, let's assume that they had 8mm of tread new. They've only got 2mm of tread left. So we've used up a big proportion of their useful life. They're actually just above the legal minimum. If the insurance company replace that set of tyres, they can argue that they're putting us in a better position than we were at the start, because the tyres are now new. They've now got 8mm of tread instead of 2mm, and they could legitimately reduce the value of that item or the payment and ask us to make a contribution toward that aspect of the repair, because they're improving it. They're providing us with more tyre life. Thanks for watching this video. Please boot the like button if you found this useful. If you're not subscribed to the channel, please do so. A lot of you aren't, and you'll be missing out on all this great content we've got planned. So have a look at these videos as well that I've lined up for you. Thanks for watching. See you in these next videos.